Hello friends, now let us start with the next topic of customs, where we are going to focus on the basic concepts or the basic definitions which are required in your customs, basic concepts of your customs. Friends, in this topic we are going to discuss your this chapter into three subtopics. First being your product, process and place, which are important for your charging section. You are talking about the product, process and the place. So the first discussion will be all about your product, process and place, which you are going to spend a quality time on discussing what is the product, what is the process and what is the place. And the second discussion will be quite simple, where you are going to talk about your transportation, control and storage of goods. During transportation, what happens, who is having the control over the goods and where the goods are being stored. And the third discussion or the third subtopic of this chapter would be your other concepts, where we are going to focus on foreign going vessel or aircraft. There's a term called as foreign going vessel or aircraft, which will be required when you are going to discuss your duty drawback. So we are going to discuss here, and we'll be again discussing the same term, foreign going vessel and aircraft, when we are going to take your duty drawback, foreign going vessel or aircraft. Right. So the discussion of this chapter is into three subtopics. The first being the three P's, the three magical P's of levy. The three magical P's of your levy. So when I tell about the three P's, we are talking about your levy, product, process and place. The second discussion will all be about your transportation, your control and storage of goods and other concepts in terms of your foreign going vessel and aircraft. Now if you see these definitions, all our definitions are given under section 2. Right. What are the three P's, my friends? The three P's are product being goods. Customs covers only goods. Product being goods in terms of your section 2 clause 22. Process being import or export. Import under section 2 clause 23 and export under section 2 clause 18. And friends, we are talking about place being India. Import in India or export from India. Section 2 clause 27. So goods under section 2 clause 22, that is product. Product is goods, section 2 clause 22. Process is either import or export. Import under section 2 clause 23 and export under section 2 clause 18. Right. And place is India. So import of goods in India or export of goods from India. So India, you are talking about India defined under section 2 clause 27. Clause 27. And when we are discussing these product, process, place, we will be discussing other related definitions. Say for example, when you are discussing the definition of goods, we will also try to understand what is coastal goods in terms of section 2 clause 7, what is prohibited goods in terms of section 2 clause 33, what is dutiable goods in terms of section 2 clause 14, what is warehoused goods in terms of section 2 clause 44 rather. Right, we are going to discuss the other related definitions. So when we are focusing on goods, once we complete goods, we will try to understand the related terms like your coastal goods, dutiable goods, coastal goods, prohibited goods, dutiable goods and warehouse goods. And likewise, once we discuss your import, we will be discussing imported goods in terms of section 2 clause 25 and importer in terms of section 2 clause 26. And when we discuss your export, we will be discussing your exported goods in terms of section 2 clause 19 and exporter in terms of section 2 clause 20. And when we are discussing your India in terms of your section 2 clause 27, we will be discussing Indian customs water. Indian customs water, which we had discussion earlier in GST, but still we will be discussing again Indian customs water in terms of your section 2 clause 28. Related definitions. Related to goods, we will be discussing coastal goods, prohibited goods, dutiable goods, warehouse goods. Relating to import, we will be discussing imported goods and importer. Relating to export, we will be discussing export goods and exporter. And relating to India, we will be discussing something called as Indian customs water. Related definitions. Right. And once you talk about the second subtopic of this chapter, where the focus is on storage, transportation and transportation, control and storage of goods. Transportation is always by way of conveyance, and control over the goods is by person in charge, and storage of goods is either in customs area or customs warehouse. Customs area covering customs station or customs warehouse. Right. So when you talk about transportation, it is there in a conveyance which is defined in section 2 clause 9. Section 2 clause 9. And you talk about control of goods is during transportation is by person in charge defined under section 2 clause 31. And when you talk about customs area, which covers your customs station as well as customs warehouse, it is defined in section 2 clause 11. And we'll be discussing the related definition. So when we are discussing conveyance, which includes vehicle, vehicle is also defined in section 2 clause 42. So we'll be also discussing your vehicle. Person in charge is standalone definition, no other related definition. When you're talking about your storage, the goods are stored in customs area. Whether you talk about customs area being customs station defined in section 2 clause 13 or customs warehouse defined in section 2 clause 43. So customs area is divided into two parts: customs station, customs warehouse. Customs station, customs warehouse, section 2 clause 13, section 2 clause 43 respectively. Customs station includes customs port, customs airport, land customs station defined in section 2 clause 12, section 2 clause 10 and section 2 clause 29 respectively. And warehouse includes public warehouse, private warehouse, special warehouse defined in section 57, section 58, section 58A, not section 2 now, section 57, 58, 58A respectively. So all these related definitions we'll discuss. And friends, the third subtopic of this chapter where we are going to focus on foreign going vessel and aircraft. Very, very important definition. Rather, a lot of times a direct question has been asked on this foreign going vessel and aircraft, which is defined in section 2 clause 21. Section 2 clause 21, foreign going vessel and aircraft. Right, that would be the third discussion. So our discussion of this chapter will be divided into three parts: product, process, place. First part. The second subtopic would be transportation, control and storage of goods during your import or export. The third part is other concept where we'll be focusing on one term, which is foreign going vessel and aircraft. Right. Now let us start with this topic. When you are starting with this topic, first understand that section 1 is the introduction section. Right. There was an amendment sometime back in section 1. We are starting with this topic, section 1. Before we take up your product, process, place, we are starting with this topic, section 1. Now section 1 tells that section 1 of Customs Act 1962 tells that it is applicable to whole of India. Customs Act applies to whole of India, and wait, save as otherwise provided in this act. It also applies to any offence or contravention thereunder committed outside India by any person. Friends, initially section 1 of Customs Act was only the section 1 said that Customs Act 1962 applies to whole of India, full stop. And recently they amended the section 1 telling that the first part is it applies to whole of India. The second part it tells that save as otherwise provided in this act, which means that if anything special is said in this act, follow that. Normally save as otherwise provided in this act means unless any special meaning is provided in any of the provisions, we have to follow this what is said. Save as otherwise provided in this act. What is the meaning of save as otherwise provided in this act? Wherever something special is mentioned, follow that. Otherwise, follow the provision that we are going to discuss. What is discussed? Customs Act also applies for any offence or contravention. For any offence or any contravention thereunder committed by a person outside India. So even if a foreigner is committing any offence for the offence or he is contravening any of the provisions of Customs Act, even he will be liable to face the criminal proceedings and the civil proceedings under Customs Act. See, what are they trying to tell? They are trying to tell that the penalty provisions and the criminal provisions, that is the civil proceedings and the criminal proceedings. Penalty provisions is civil proceedings and imprisonment provisions are nothing but criminal proceedings under Customs Act 1962 are equally applicable for a person who is outside India but he has committed an offence or contravened any of the provisions of Customs Act. Now let us see the understanding. Even a foreign supplier, a foreign customs broker or any other person including an Indian person violating Customs Act 1962 will be subject to penalty, civil proceedings and prosecution, criminal proceedings in India. Even if a foreigner is violating the provisions of Customs Act, I will repeat, even if a foreigner is violating the provisions of Customs Act which attracts your penalty or which attracts prosecution, even he is liable to pay the penalty and he will be facing the criminal proceedings in India. So Customs Act 1962 has widened its coverage even to foreigners but who are violating the provisions of Customs Act. To put in a very simple terms, Customs Act is applicable to whole of India, right? And even it is applicable to the persons who are outside India but they are violating the provisions of Customs Act. Customs Act is applicable to all the persons who are there in India. even it is applicable to persons who are outside India who are violating the provisions of your Customs Act 1962. So even a foreign exporter or a foreign importer or a foreign customs broker or any other person including an Indian person who are violating the provisions of Customs Act 1962 will be called for paying penalty, right, under Customs Act 1962, will be even facing prosecutions. So there will be civil proceedings, that is penalty, and criminal proceedings, that is imprisonment, even against a foreign person. There will be civil proceedings, that is penalty, and criminal proceedings, that is prosecution, even against a foreigner, whosoever is violating your Customs Act 1962. So this is a very, very important change that they brought in Customs Act, very recent change that they brought in Customs Act, to tell that though you are a foreigner but you collided with Indian person and you violated the provisions of Customs Act 1962, you are also liable for penalty under Customs Act 1962 for the offence committed. You also liable for prosecution, that is imprisonment, under Customs Act 1962. So both civil proceedings as well as criminal proceedings. Civil proceedings is penalty, criminal proceedings is prosecution or imprisonment, will be against even a foreigner. So that is the understanding of section 1 of your Customs Act 1962. Right. Now friends, let us enter into the first subtopic of this chapter, friends, where we'll be focusing on your 3 P's: product, process and place. Friends, your charging section of Customs Act 1962 is section 12. Charging section of Customs Act 1962 is section 12, which we'll be discussing in the next chapter. We'll be discussing about charging section in detail in the next chapter, your levy of customs, but charging section is section 12. Right, this charging section focuses only on 3 P's. In GST, focus was on 6 P's, whereas in your customs, the focus is only on the initial 3 P's. Right, last 3 P's are also there, but in a different manner. So the focus is only on basically your product, your process and place. Now, am I trying to tell that price, percentage and your person is not important? Yes, price, percentage and person are important, but they only focus on collection. So in GST, the first 3 P's as well as the last 3 P's were only for levy. Even for levy, we are talking about the first 6 P's. Whereas in customs, the first 3 P's, product, process and place, focuses on levy. Whereas when you talk about price, percentage and person, they focus on collection. The focus is on the last 3 P's are not included in your levy. The last 3 P's are only for your collection. So the focus is only on the first 3 P's. The focus is only on the first 3 P's. That is product, process and place. So if I were to write a differentiation factor between your GST and customs, right. So when you talk about your GST and customs, for the first 3 P's and the last 3 P's, product, process, place, price, percentage, person, the focus of all the 6 P's in GST was all about levy. Whereas in customs, the first 3 P's focuses on levy. Levy focuses only on first 3 P's. And when you talk about last 3 P's, price, percentage and person, even that is there, but that last 3 P's are only talking about collection. Right, in GST, all the 6 P's are relevant for levy. All the 6 P's, consolidatedly all the 6 P's are relevant for levy. Here, first 3 P's on levy and the last 3 P's are only about your collection. So price, percentage and person is only important for your collection. Right. Now friends, let us discuss about the first 3 P's. First, let us start with your product, goods. That is goods. Friends, when you talk about your product, goods, it is defined in section 2, clause 22 of your Customs Act. Section 2, clause 22 of your Customs Act 1962 defines goods and tells that goods includes, inclusive definition. Goods includes, it talks about 5 points. Goods includes 5 points. Right, and if you see the last point, it is a general meaning, any other movable property, any other kind of movable any other kind of movable property. So the fifth point is a general meaning, any other kind of movable property. So even in your GST, goods started with goods means any kind of movable property. So here you are talking about any other kind of movable property. But there are first 4 points which are not specifically mentioned in your GST. You are talking about goods includes vessels, aircrafts and vehicles. Goods includes stores. Goods includes your baggage. Goods also includes your currency and negotiable instrument. Goods also includes your currency and negotiable instrument. So there are first specific definitions in terms of your vessel, aircraft and vehicle. Goods starts with vessel, aircraft and vehicle. Goods includes vessel, aircraft, vehicle. Then they talk about stores. Then they talk about baggage. Then they talk about your currency and negotiable instrument. And finally they talk about any other movable property. General definition is any other kind of movable property. Now friends, why they talk about your vessel, aircraft and vehicle? Friends, if at all you are talking about, there are 2 types of vessel, aircraft and vehicle. Let us try to understand that. So there is one vessel which is being imported. Let us try to understand vessel, aircraft, vehicle with one example itself. An Indian shipping company. You are talking about an Indian shipping company imports a vehicle for the first time from USA for usage in its business. So this import is happening from USA. So this process of import is happening from your USA. Now friends, when this vessel is coming for the first time, in India, this would attract your customs duty, that is, this would attract your import duty. Right. So this would attract your import duty. Initially when it is coming, this would attract import duty. But the same vessel again and again will be used for taking the goods outside India, bringing the goods in India, so on and so forth. And the same vessel is again and again used for conveyance. So this Indian shipping line, what it will do? It will use the same conveyance that it has purchased for the first time, on which import duty was paid. So when the first time purchase is happening, it will be subject to your import duty. But when the second time import is happening, now friends, this same conveyance will be used for transportation. It will be taking the goods outside India, again bringing the goods in India, taking the goods outside India, bringing the goods in India. Now the second time import duty will not be there. Why? Only at the time of first time import, only at the time of first time purchase, it will qualify something called as import. You will be clearing this for home consumption. There will be clearance for home consumption. And thereafter, this won't even qualify as import, because when the vessel is coming for the second time and all, you don't clear the goods for home consumption. It is used as a means of conveyance. There will be no clearance for home consumption. When I tell clearance for home consumption, it does not mean that you have to take it in India physically, but you have brought this item for the first time in India. At the time of first time purchase, that will be subject to import duty. Right? The same vessel is going to be used thousands of times by the Indian shipping line to take the goods outside India and to bring the goods in India. At that point of time, it will not be called as import technically, and it will not be having attracting import duty. Only at the time of first time purchase by the Indian shipping line, that new vessel. Now you are talking about the new vessel which was imported for the first time by the Indian shipping line. Only technically that will qualify as import, because for the first time it becomes the asset of the Indian shipping company. It will file your bill of entry document for this first time import, and the goods will be, though not physically cleared for home consumption, there will be clearance for home consumption, import duty will be paid. And thereafter, whenever it is used for conveyance of the goods, taking the goods from India to outside India, bringing back the goods from outside India to India, so on so forth, at that point of time, this vessel would not attract your import duty. I can give you another example. Right, say for example, why they have spread this particular definition. If you remember You're talking about an example where you're talking Sachin Tendulkar got a gift from Michael Schumacher, Ferrari car. Right? Ferrari car is nothing but vehicle. Even that attracted import duty. Michael Schumacher, you're talking about Michael Schumacher, right? F1 racer, giving Ferrari car as gift to Sachin Tendulkar. Giving Ferrari car gift as gift to Sachin Tendulkar. Right? So, goods includes vessel, aircraft and vehicle. So, Sachin Tendulkar was liable to pay import duty on this Ferrari car. Friends, in customs, consideration is not relevant. Even though this Ferrari car was given as a gift by Michael Schumacher to Sachin Tendulkar, it attracted import duty. Consideration is not relevant. If you don't, even if you are getting something for free in India, import duty is attracted. Your import valuation rules will help you out to find out the value. So, your import duty will be there even if anything you have imported for free. I'll repeat, your import duty is levied and even it is collected even if import is for free. So, when Michael Schumacher gave Ferrari car to Sachin Tendulkar, import duty levy was there and collection is also there. He got a special relaxation, that is a separate subject matter. But import duty is there, levy is there as well as collection is there. So, unlike your GST, consideration is not important in customs. Even if you get something free, even if import is for free, it attracts import duty. I'll repeat, even if import is for free, this Ferrari car is nothing but import of Ferrari car for free. Import of Ferrari car for free. Even if import is for free, import duty is levied. So, we are understanding two concepts. One, goods includes vessel, aircraft and vehicle. So, even that vehicle, Ferrari car is subject to customs duty. And second important concept, that even if import is for free, it is subject to your import duty. Right? So, why this vessel, aircraft and vehicle is given? We have tried to understand why they have spoken about your vessel, aircraft and vehicle. Right? Goods include stores. Now, friends, inclusion of stores when you talk about goods is for the purpose of giving duty drawback. If you see vessel, aircraft and vehicle, that's an explanation. Levy of import duties on conveyance which is not used for import and export of goods. So, first time when the Indian shipping line imported that vessel, it attracted import duty. And thereafter, if that vessel was used for import and export of goods, taking the goods from outside to outside India and bringing back the goods to India, at that point of time, there is no import duty because already that vessel already was imported and cleared for home consumption, import duty was already paid. Thereafter, when it is used as a conveyance to take the goods outside India and to bring the goods from outside India to India, that will not attract import duty. Stores. Goods include stores. It is specifically given to tell that duty drawback will be given on stores which are supplied to foreign going vessel or aircraft or Indian Navy. We are going to understand this in your other concept where you are going to talk about your foreign going vessel or aircraft. Friends, what are they trying to tell? If any stores are supplied to your foreign going vessel or aircraft, right, then on the stores, if import duty was earlier paid, you will get duty drawback. Duty drawback is nothing but refund of import duty. So, if at all it was subject to import duty earlier, you are going to get duty drawback, refund of import duty. Stores supplied to foreign going vessel and aircraft will get duty drawback. Friends, now it is not for collection of import duty, it is for giving duty drawback. It is not for collection of import duty, it is for giving duty drawback. If the stores are supplied to your foreign going vessel or aircraft, or even there is one more category, Indian Navy, or your Indian Navy, or you are talking about Indian Navy. If the stores are supplied to foreign going vessel or aircraft or Indian Navy, then if import duty was already paid on that particular stores, if it is not paid, no question of duty drawback. If import duty was already paid on that stores, you will be getting the refund of import duty. Friends, inclusion of stores is not for collection of import duty, it is for refund of import duty, called as duty drawback. And that refund of import duty, that is duty drawback, will be there only if the stores are supplied to foreign going vessel or aircraft or your Indian Navy. You will understand this better when we are discussing about duty drawback. Right. The next point is baggage. Friends, when you are coming from a tour, you have made a recent trip to say Russia. right? You're coming back from Russia, or you made a recent trip to New Zealand, famous destination spot when you talk about tourism, right? New Zealand or Australia, lot of activities are there. You came back from New Zealand or Australia or Russia, whatever it is. You'll have some new items along. You would have purchased some items from that place, from Russia or from New Zealand or from Australia. You would have purchased some items. Now those items are technically called as baggage, personal effects. Those items are technically called as baggage, otherwise called as personal effects. Personal effects. You use this term in your income tax. Personal effects. Your personal items. Even these baggage are called as goods because even they will attract your import duty. So the baggage that you're bringing, new items that you're bringing from outside India to India while you're coming back to India, even that will attract import duty if it is more than the baggage exemption limit. There's an exemption limit in baggage. You have baggage rules 2016. So it is only for making sure that customs officer are even monitoring your baggage, and import duty is there even on baggage, but it will be there beyond a particular exemption limit. That exemption limit is called as general free allowances. If you are bringing baggage in excess of your general free allowances, if you are bringing baggage in excess of your general free allowance, what is general free allowance? It is an exemption given for baggage. Then import duty is even on baggage. The normal general free allowance given for baggage is 50,000. So if you are bringing goods, new items from outside India, from Russia, New Zealand or Australia where you have made a visit recently, you are coming back to India, and if your baggage limit is exceeding GFA, general free allowances, import duty is even there on your baggage. Right. Currency and negotiable instrument. Friends, currency and negotiable instrument is included not for purpose of collecting import duty on your currency or negotiable instrument. Rather, the import duty rate on currency and negotiable instrument, the BCD rate is 0. The customs duty rate on currency and negotiable instrument is 0. Now, you'll tell that if the customs duty is 0, why they have included that in the definition of currency, why they have included that in the definition of goods? Why does goods includes currency and negotiable instrument? It is only to ensure that customs officer will be even checking your currency that you have brought from outside India. They are not going to collect import duty. It is only for monitoring your foreign currency to check whether you have brought the foreign currency from outside India within the limits of your Foreign Exchange Management Act. Friends, if you remember in the first chapter I said customs cannot be read independently. Customs has to be read along with allied laws. Customs cannot be read independently. Customs has to be read along with allied laws. Right. So now customs officer are given powers even to check your currency and negotiable instruments. Is there any duty on currency and negotiable instruments? No. The import duty rate on currency and negotiable instrument is 0. The import duty rate on currency, if you are bringing dollars, on dollars you are not going to pay import duty. The import duty rate on the currency and negotiable instrument, say for example dollars, is 0. You are not going to pay any duty. But including it in the definition of goods gives the powers to customs officer to check your currency. They can tell, okay, bring out your currency. Now you cannot tell them, no, currency is not goods, therefore you cannot check the currency. It is not within the power of Customs Act 1962. One should not argue like that. So goods includes currency and negotiable instrument, not for the purpose of import duty levy. There is no import duty collection. 0. Import duty rate is 0. It is only to ensure that proper officer has got the right to check the currency even of the person who is coming from outside India. He can even check the currency and see whether it is within the limits of your Foreign Exchange Management Act. Is there any import duty levy or not? No. Customs officer will check your currency only to see whether you are violating other acts. There is no import duty purposes. There is no import duty purposes. The purpose is whether you are violating other acts or not. Right. So that is the purpose. And friends, the last point is any other kind of movable property. General meaning, any other kind of movable property. This is also the meaning of goods under your GST. Any kind of movable property. General meaning of goods. Friends, to understand this general meaning of goods, we have to see a case law. Very simple case law. Right, and we have discussed this in your GST as well. So you are having a case law which is in terms of your Associated Cements Companies Limited 2001 Supreme Court. Is this the exact citation of the case law? No. Citation will be Commissioner versus Associated Cement Companies Limited. You need not remember the exact citation. What you have to remember is assessee's name, year and the deciding authority. This is not the exact citation. I'll repeat, this is not the exact citation. Citation is nothing but how to write the case law. You will have assessee versus department or department versus assessee. Then you will have the volume number, you will have the publication house which published the judgment, you will have the page number in which in which page that you have this particular judgment in the publication house, which volume. So you will have the publication house, say for example service tax review or excise and customs review. You will have a lot of publications house, ELT, excise law times, STR, service tax review. Right, so you'll have a lot of publication houses which will publish the judgment. So that citation will be nothing but assessee versus department and which publication house, which volume number, which page number. That exact citation will be given. And you're going to talk about the year in which that particular judgment was published, plus you're talking about the deciding authority. So that is the exact citation. You need not remember the exact citation. That exact citation is given to easily locate the case law. What you have to remember is assessee's name, the year of judgment, in which year this judgment was published by that house, and the deciding authority. Normally you will have case laws only with Supreme Court. Only with Supreme Court. Now an issue came up, whether when you are talking about this technical advice and information technology software, whether this information technology, that is your technical advice and information technology, whether they can be called as goods. You discuss that. I've specifically said when you talk about your intellectual property rights and information technology software, I said that they are goods. They are goods. Both your intellectual property rights and information technology software, they are goods because they are mobile. Because they are mobile, they are goods. But transactions dealing with them are mostly supply of services. So when you talk about information technology software, development of information technology software is supply of service. Installation of information technology software is supply of service. Right? If it is outright sale of information technology software, it is supply of goods. And transaction with respect to your intellectual property rights is generally supply of services. Temporary transfer or permitting the use or enjoyment of your intellectual property rights, it is supply of service. But if it is outrightly given, if intellectual property rights are given just like that, outrightly given, right, outright sale of intellectual property rights, then it is supply of goods. Now friends, that was all about your GST. In customs, they again were very clear that when you talk about your information technology software, right, and if they are given on any media, if the moment they are put on any media, whether it is a paper or cassette or disc, they become mobile and therefore they are goods. The moment you are talking about information technology software, that is coding, the moment they are put on a paper, piece of paper, or they are put on your cassettes or discs or any other outlet, any media, it need not be paper, it need not be cassette, or it need not be disc, any media, the moment they are put on any media, let it be paper or cassette or disc or CD, anything, it becomes mobile, therefore it is goods. Therefore, when this information technology software comes from outside India to India, in any media, let it be your paper or let it be your CD or let it be your disc, anything, then it is mobile, it is goods, it attracts import duty. Right. So what is the final judgment of Supreme Court in the year 2001 in Associated Cement Companies Limited? It said that information technology or any technical advice, the moment it is put on a media, let it be any media, paper or cassette or disc or CD or any pen drive, any media, the moment it is put on a media, it is mobile, it is goods, therefore even that attracts your import duty. So that any other kind of mobile property, we have discussed long back, IT, information technology software and intellectual property rights are always goods. Always goods. Their transaction may be supply of goods, supply of services in GST, but as far as customs is concerned, the moment they are coming inside India, it is import. Now if I were to pictorially present this in a very simple format, Associated Cement Companies Limited 2001 Supreme Court judgment, you can understand in this way. Right. Now if at all when they are entering inside India, whether it is permanent transfer or temporary transfer, when they are entering inside India, when this information technology is coming to India, whether it is permanent transfer or temporary transfer, it is import of goods. So this will always be import of goods subject to import duty. Subject to import duty. So it will be subject to import duty for sure. It is always import of goods subject to import duty. So it will always be subject to import duty. Whether this information technology transfer was a permanent transfer or a temporary transfer, it doesn't make any difference. But friends, when it is sold within India, right, when it is further transacted within India, then you have to understand, is it permanent transfer or temporary transfer? Permanent sale, outright sale, or development usage, etc. So in that scenario, when this information technology is further transacted in India, it may be supply of goods if it is permanent transfer, or it may be supply of services if it is temporary transfer, subject to GST. But it depends. See, when it is coming from outside India to India, whether it is a permanent transfer or whether it is temporary transfer, it doesn't make any difference. When it is coming from your outside India to India, so whether it is permanent transfer or whether it is temporary transfer does not make any difference. It is import of goods. The goods are coming. So whether it is permanently coming or temporarily coming, it is not at all relevant. Whether the goods are coming as permanent transfer or temporary transfer, it does not make any difference. It is import of goods, because it is goods, basically import duty will be there. But within India, this is the first part. Second part, within India, if there is permanent transfer of your information technology software, then it is supply of goods. If it is temporary transfer of your information technology, then it is supply of services. Obviously, whether it is supply of goods, whether it is supply of services, there will be GST. So this flowchart you have to understand. When they are coming from outside India, right, whether it is permanent transfer or temporary transfer, a very important point. Whether it is permanent transfer or temporary transfer, it qualifies as import of goods. Not import of services, friends. It qualifies only as import of goods if it is on a media and subject to import duty. Here, friends, we are not talking about import of services. Even if it is temporary transfer, friends, we are not talking about import of services. It always qualifies as import of goods. So you are not talking about permanent transfer, import of goods, temporary transfer, import of services. No. It always qualifies as import of goods. I am talking about information technology software put on a media. Import duty is there. And thereafter in India, if there is permanent transfer, it is supply of goods subject to GST. If it is temporary transfer, or temporary transfer means you are talking about your adaptation, development, design, customization, programming, upgradation, implementation, or enhancement. Other than outright sale, it is supply of services subject to GST. So you have to understand that particular difference. Because information technology software and IPR, intellectual property right, by default are goods. The transaction in GST may be supply of goods or supply of services, but when they are coming from outside India to India, it is always import of goods. On a media, it is always import of goods, no services. It is always import of goods. So that point you have to understand. Right. Now one important difference you can highlight. Right. In GST also, your vessel, aircraft, vehicles was goods. Stores was goods, baggage was goods, any other item was goods. But there's one difference that you can easily highlight. As far as your GST was concerned, money was neither goods nor services. But here, your currency and negotiable instrument, that is money, is goods. As far as your GST was concerned, the difference that you can easily find when you talk about the meaning of your goods and the meaning of your goods in GST and meaning of goods in customs. So when you talk about your goods with respect to GST and goods with respect to customs, one important point you can easily identify, difference that you can easily identify. Your goods in GST excludes money. Your goods in GST excludes mere transaction in money. Also securities, but we are focusing only on money. Whereas your goods in customs includes currency and negotiable instrument, that is money. Now understand that In GST, mere transaction in money never attracts GST. In customs, transaction in money, that is currency and negotiable instruments, will not attract customs duty. Though levy is there, it will not attract customs duty. But then why it is given? To ensure that monitoring of currency and negotiable instrument is there in terms of your FEMA. Only to monitor the foreign currency inflow and outflow. When you talk about your FEMA, the definition of goods in customs includes currency and negotiable instrument. What is the purpose? In customs, your currency and negotiable instrument is included not for the purpose of customs duty collection, but for the purpose of monitoring the inflow and outflow of currency in terms of your FEMA, whether it is within the limits of FEMA or whether you are violating the provisions of FEMA. Right. With this, I would even like to highlight one more difference that you have to understand. See, there's a big difference when you talk about your GST and customs. When you talk about your GST and customs, you have to understand a major difference. Right. Other than the difference, we will be discussing about your GST time and again, so that you have more clarity. Now the difference we have discussed, you have a much clarity. Okay, in GST, money was neither goods nor services, but in customs, your currency and negotiable instrument, that is money, is included in the definition of goods, not for the purpose of collecting customs duty because import duty rate is 0, but for monitoring the currency in terms of your FEMA. Your GST is controlled only by Ministry of Finance, whereas customs is controlled by Ministry of Finance and Ministry of Commerce, that we have discussed. Your GST, you can read it independently, but your customs, you have to always read it along with your allied laws. Example, FEMA. One of the examples is FEMA, not the only example. You can master your GST by reading it independently. It can be understood independently, but your customs has to be always read along with allied laws. Your customs has to be always read along with allied laws. And friends, when you're talking about your GST officer are only revenue officers, right? They have only powers to collect tax. Right? In customs, your customs officer will have the power to collect customs duty as well as other duties. They have other responsibilities also, like your customs officer will also have responsibility of preventing smuggling and preventing terrorism. The powers which are given to GST officer are very limited powers. Their powers is only to collect tax. I am talking about your GST officers. Whereas when you talk about your customs officers, their role and responsibilities are very different. You cannot take a customs officer just like your GST officers. They have extraordinary powers. They have powers equivalent to your police officers, right? One of the duty that customs officers are responsible is to collect customs duties, and they have other responsibilities in terms of ensuring that there is no smuggling which is happening across the borders. They have even powers to ensure that terrorism is stopped. So customs officers have got extraordinary powers which you cannot expect from a GST officer. One important point, you will always find customs officers along with their arms and ammunition, their rifles, their pistols, rifles. But when you talk about GST officers, though above a certain rank of officers, even GST officers will have rifles, but they will not carry the rifles. They will use it only for say on Republic Day or Independence Day when there is a parade. So they will bring out their rifles only on parade, on Independence Day or Republic Day, etc. But when you talk about customs officer, rifles, if you look at customs uniform, you will always find rifle along with them. Their arms and ammunition will always be there because they have extraordinary powers. You cannot deal with a customs officer in a manner you deal with your GST officer or your income tax officer. They have extraordinary powers. One of their role is to collect your customs duty. They have other roles and responsibilities in terms of your preventing smuggling, preventing terrorism, and they will also take care whether the allied laws are complied with, whether your FEMA law is complied, etc. So they have other roles and responsibilities as well. Right, friends, that is all about the definition of your term goods. We are done with the definition of goods. Now if you see goods in terms of section 2 clause 22, goods includes, we have discussed the logic behind the definitions. Goods includes what? vessel, aircraft, vehicle, stores, baggage, currency and negotiable instruments, any other kind of movable property. And we also discussed the Supreme Court judgment in case of Associated Cements Companies Limited 2001, where it was said that if a technical advice or information technology is put on a media, the moment it is put on any media, it becomes movable and therefore it is goods, right? Though they are intangible, so intangibility is not the criteria. Though this information technology and IPR, intellectual property rights, are intangible, the moment they are put on a media, they become movable, therefore they are goods. And other related definitions. Now friends, we are focusing on other related definitions when you talk about your goods. Dutiable goods. Dutiable goods in terms of your section 2 clause 14. Right, dutiable goods means goods which are chargeable to duty and duty is not yet paid. Very important. A very different meaning. Dutiable goods means it should be subject to duty and duty is not paid. It should be subject to duty and duty is not yet paid. Right, we will discuss one more term. Warehouse goods under section 2 clause 44, because both are related. Goods deposited in warehouse, that is whether it's public warehouse or your private warehouse or your special warehouse. Public warehouse in terms of section 57, private warehouse in terms of section 58, or special warehouse. Goods deposited in warehouse. Now let us understand both these terms. Your dutiable goods in terms of section 2 clause 14 and your warehouse goods in terms of section 2 clause 44. Dutiable goods is section 2 clause 14, warehouse goods is section 2 clause 44. Now how to understand both the definitions together? Friends, we have discussed the term goods. We are discussing the related definitions. Right. Supposing you are talking about goods attracting import duty. Right. Import duty on the goods says 0%. First scenario. Second scenario, import duty is say 10%. Third scenario, import duty is say same 10%. The difference is, in the second scenario, import duty 10% is paid. In the third scenario, import duty at 10% is not yet paid. Friends, only the last category qualifies to be your dutiable goods. When you talk about the first category, you are not talking about dutiable goods. The goods are not dutiable goods. Why? They are not chargeable to duty. Levy is there, but they are not chargeable to duty. Second category, import duty is at 10%. The goods are chargeable to duty. Yes, true. And the second part of the dutiable goods definition is duty is not yet paid, but here duty is paid. So it is not qualifying. The second part. What are the two conditions of dutiable goods? The goods are chargeable to duty plus the duty is not yet paid. In the first case, import duty at 0%, the goods itself are not chargeable to duty, so not dutiable goods. In the second case, the goods are chargeable to duty, but the duty is already paid, so they are not dutiable goods. Only in the third case, it qualifies to be dutiable goods. Why? The goods are chargeable to duty plus duty is not yet paid. So in terms of section 2 clause 14, they qualify to be dutiable goods. And friends, only dutiable goods can be taken to warehouse. If at all the goods are not dutiable goods, they cannot be taken to warehouse. Only dutiable goods you can take it to warehouse. That is the basic condition of your warehousing procedure, which is not applicable for your exams, but still I have to explain few points. Only dutiable goods can be taken to warehouse. Only and only dutiable goods can be taken to warehouse. And when the dutiable goods are taken to warehouse, friends, they become warehouse goods. Can you take non-dutiable goods to warehouse? No. Non-dutiable goods, the first two types of goods, in the first two cases where import duty is at 0% or import duty is at 10%, but the duty is paid, they are not at all dutiable goods, and those goods cannot be taken to warehouse. Only and only if the import duty is at some rate, say 10%, not 0, some rate, 5 or 10% or any rate, and the duty is not yet paid. So the goods are chargeable to duty and the duty is not yet paid, they become dutiable goods. And only dutiable goods can be taken to warehouse, and when the dutiable goods are deposited in warehouse, they become warehouse goods. When the dutiable goods are deposited in warehouse, they become warehouse goods. So you have to understand both. We have to discuss both the term dutiable goods, as well as along with that we have discussed your term warehouse goods. Goods deposited in warehouse, whether public warehouse or private warehouse or special warehouse. There are three types of warehouse. They are called as warehoused goods. Now friends, we are discussing the next term where you are talking about your coastal goods. Where you are talking about coastal goods. In terms of your section 2, clause 7. Coastal goods means goods other than imported goods. First of all, they should not be imported goods which are transported only by way of vessel. Coastal means only by way of sea, which are transported only by way of vessel from one port to in India to another port in India. From one port in India to another port in India. The meaning of coastal goods. Important point, coastal goods are goods other than imported goods. Coastal goods are goods other than imported goods. Now, how to understand this definition of coastal goods, my friends? Simple definition. A very, very simple understanding when you talk about your coastal goods. You are talking about a scenario. Assume that from USA to India. Let us assume that you are talking about Mumbai. Certain goods are coming. And from there to Chennai, the other part of India, Chennai, the goods are moving. Right. So you are talking about the goods are coming from USA to India. From there, the goods are going from Mumbai to Chennai. Now, if at all in that vessel, there are 1000 units of an item, right? They are imported goods. When the goods are coming from outside India to India, they qualify it to be imported goods. So, these 1000 units are nothing but imported goods. And from in Mumbai, friends, few units are again loaded. So, when the vessel is moving from Mumbai to Chennai, the 1000 units which came from USA were there, plus 100 units are loaded at Mumbai. 100 units are loaded at Mumbai. 1000 units which are coming from USA, they are proceeding towards Chennai, plus 100 units are loaded at Mumbai. These 1000 units were coming from USA. Now, friends, understand that in this scenario, the 1000 units which are still going towards Chennai. So 1000 units came from USA to Mumbai. From Mumbai, they are moving towards Chennai. Import is not yet over. They are still imported goods. Only these 100 units which were loaded at Mumbai and they are going to go to Chennai. Only these 100 units are coastal goods. So with this example, with this picture, you clearly understand what is imported goods, what is coastal goods. Friends, understand that these 1000 units remain as imported goods till they are reaching Chennai. Import is over only when the goods are cleared for home consumption and they will remain to be imported goods. Right? Unless you clear them, they don't become domestic, they don't become part of domestic goods. They are still imported goods. Right? So if you see this example, from USA to Mumbai, 1000 units were coming from USA. These 1000 units were imported goods. Entire 1000 units were imported goods. And friends, from Mumbai to Chennai, along with these 1000 units, 100 units were added. 100 units were added in Mumbai, loaded in Mumbai. Now, friends, 1000 units continue to go from Mumbai to Chennai. Nothing is happening to 1000 units. Now, these 1000 units, they remain imported goods. The new 100 units that are added or loaded in Mumbai and proceeding towards Chennai, they are coastal goods. Coastal goods means, section 2 clause 7 means goods other than imported goods which are transported in vessel. From one port of India. So, which are transported in vessel. 100 units only qualifies everything. 100 units are not imported goods and they are transported in vessel from one port of India, Mumbai, to another port of India, Chennai. So, only these 100 units qualifies the definition. 100 units are not imported goods, plus they are transported in vessel, plus they are going from one port of India, Mumbai, to another port of India, Chennai. So, only these 100 units are coastal goods. So, that is all when you talk about your coastal goods. Section 2, clause 7 of your Customs Act 1962. Friends, when you talk about the last part of the related definition, prohibited goods. Prohibited goods under section 2, clause 33. Prohibited goods means goods where absolute prohibition is there. You cannot import or export, absolute prohibition. Right, but does not includes goods which can be imported or exported with conditions, and you comply with the conditions. You comply with the conditions, right? Let us understand this prohibited goods in simple language, just like we have discussed other definitions in very simple language. All the definitions we try to take an example and we have tried to understand in a very simple manner. Because in customs there is a habit or there is a practice of asking direct questions, which at final level, which we feel it should not be that, but in customs I say a lot of times ask direct questions. Lot of times they do ask very direct questions. Explain coastal goods, explain prohibited goods. So this would be helpful, and you are not required to buy out the definition, just understand. Now if I am talking about the types of goods in customs, we are going to discuss this in your foreign trade policy, that goods can be bifurcated into 4 parts: prohibited goods, restricted goods, channelized goods, and free goods. Prohibited goods, restricted goods, channelized or canalized goods which can be imported or exported only by notified people, and free goods which can be imported exported by anyone in India. So free goods is free import and export. This understanding is in terms of your foreign trade policy. Now from there we are extracting the definition of prohibited goods in your Customs Act. Right. So this understanding is in terms of foreign trade policy. Now friends, what they tell? In terms of your Customs Act, prohibited goods are always prohibited goods. In terms of your Customs Act, they define only prohibited goods. Plus restricted goods can be of 2 types. You don't comply the conditions or restrictions, and you comply the conditions or restrictions. If you don't comply the conditions or restrictions, you are talking about prohibited goods. So under customs, prohibited goods, this is prohibited goods under your Customs Act. This is prohibited goods under your Customs Act. Under customs, prohibited goods means those goods where import and export is absolutely prohibited, absolute prohibition. It also means those goods where there are restrictions, right, and you don't comply with the restrictions or conditions. So you are talking about restricted goods where you don't comply with the conditions, right? If at all you are talking about restricted goods where you comply with the conditions, then they are not prohibited goods. So prohibited goods does not include those goods where import and export is with a condition or restriction and you comply with the condition. If you comply with the condition, then they are no more prohibited goods. So this is a very simple way to understand the categorization of goods, both in terms of your foreign trade policy, also in terms of your Customs Act. In terms of your foreign trade policy, the goods are categorized as your prohibited goods, restricted goods, channelized goods, and free goods. Prohibited goods, no one can import export. Restricted goods, you can import and export with certain conditions or restrictions or licenses to follow. Channelized goods or canalized goods, only certain people can import or export. Free goods, anyone can import or export. In customs, they have given only prohibited goods. So if I were to tell prohibited goods under your customs, it is prohibited goods under your foreign trade policy, the goods on which there is absolute prohibition for export or import, plus those goods where you are talking about restriction or conditions or license and you don't comply with the restrictions, conditions or license. You don't comply. You don't follow the conditions, restrictions or license. Then they are prohibited goods. If the goods are restricted goods and if you comply with the conditions, then they are no more prohibited goods. No more prohibited goods. So from the understanding of goods in foreign trade policy, you can have the understanding of prohibited goods in your Customs Act. I'll repeat. What are prohibited goods? 2 types. Absolute prohibition of import and export. Import and export with conditions or restrictions or licenses, but you don't comply with the conditions, restrictions of the licenses. The definition of prohibited goods under your Customs Act. And those goods on which there are conditions, restrictions or licenses and you comply with the conditions, restrictions or licenses, they are not prohibited goods. That is what is given in does not include spot. That is what is given in does not include spot. So if you see the definition of prohibited goods, you will find prohibited goods means under section 2 clause 33 means goods where absolute prohibition is there. Simple, absolute prohibition, right? No one can import export. Or you are talking about prohibited goods does not includes import and export of goods with conditions and you comply with the conditions. which means it will include import and export of goods with conditions, and you don't comply with the conditions, So that is what we have tried to understand in simple pictorial presentation. Friends, we have spent a quality amount of time, a very quality amount of time in understanding what is goods in terms of your section 2 clause 22 of your Customs Act, read along with the case law, that is Associated Cement Companies Limited 2001 Supreme Court. Also, we have discussed the related definitions in terms of your dutiable goods or warehouse goods or prohibited goods or even your coastal goods. We have spent quality amount of time. We have tried to understand everything in terms of your pictorial presentation. Simple understanding. So when you revise, things will be very, very simple.